Infinite banking is a scam. Is infinite banking as good as everyone says it is, or is it a total con? Well, I'm going to answer that for you today. Hi, my name is Laurent Munier, and I'm a partner and advisor at Safe Pacific Financial here in Vancouver, Canada. And we've been helping Canadians set up infinite banking policies for the last 14 years. And we're certified by the Nash Institute, the official infinite banking source. So today, we're going to dive into a topic that sparks a lot of debate, especially here online, and why some people consider infinite banking as a scam. And if you search for, infinite banking scam on Google or whatever search engine, you'll find a lot of people that get all up in their feelings about this strategy. So in today's video, I'm going to unpack some of the criticisms. I'm going to look at both sides and address some legitimate concerns that people have about this financial strategy. And so before we start, I'm going to tell you right now, just, the TLDR, the strategy is not a scam. It's something that we've been doing here at Safe Pacific and implemented for hundreds of Canadians for more than a decade. It's actually something that I do personally, and I love it. But here we go. So why do some people call infinite banking a scam? Well, here's some of the main reasons that they call it that. The first reason is that you could make more money with other investments. And this is one of the most common critiques of the infinite banking concepts, is this perceived opportunity cost, right? So this means that you could put your money into something else. The most common argument that you get is that you would get higher returns by putting your money into something else like an equity portfolio or an S&P 500 ETF, which has got an annual average return of around 9%. And yes, it's true. Investing into an equity portfolio will generally yield a higher return over time than the conservative growth that you would see inside a life insurance policy. It doesn't take a genius to figure out that an equity portfolio will generate a higher return than a conservatively managed fund inside an insurance policy. 100% agree. And if generating the absolute highest percent return on your money is the only concern, then yes, you should go invest in equities, or you should buy Bitcoin, or you should bet on a football game or something like that. These two things are vastly different, right? An equity portfolio or an S&P index ETF and the cash value inside a whole life insurance policy are completely different things with completely different mandates set up to do completely different things for completely different reasons. This comparison also assumes that putting some of your money into one of these things means that you wouldn't put money into the other, which is silly, right? It's not a zero-sum game where you can only put all of your money into the cash value of a life insurance policy, or only put all of your money into the equity portfolio, or into real estate, or into crypto, or into whatever, right? A proper financial strategy will have some insurance, will have some investments, will have some higher risk, some lower risks. And we recommend that you do multiple things with your money. This argument also doesn't take into account the many benefits of having a whole life insurance policy, like never having a negative return inside the policy and having tax advantage growth inside your policy, and the fact that you get the permanent life insurance that you probably need. You also get the fact that the account is so secure that you can leverage against it from an insurance company or a bank. You also get the fact that you can use your money through this leverage without withdrawing it or without ever interrupting the compound growth over time. So these are really valuable things to the right person. And the argument that an equity portfolio pays a higher return completely discounts all of these things, which are really important. Another reason, another frequent criticism is that it's too expensive, right? The cost associated with the infinite banking, especially with whole life insurance policies, is higher. And people argue that whole life insurance is significantly more expensive than term life insurance. And so because of this, you should never ever do this, and you should only ever buy the less costly term insurance. So again, whole life insurance and term insurance are two different things. Term insurance ends at a certain time, which would usually be after 10 years or 20 years, and then it renews. which is usually at a significantly more expensive and eventually people will cancel the term insurance because it becomes prohibitively expensive to renew. Whole life insurance is there for your entire life. You get one price now, and that's your price forever. It's also guaranteed to pay out because one day you're probably going to die, which is shocking, I know, right? So the whole life insurance is going to pay out. Term life may or may not pay out because you may or may not pass away during the term of that insurance. And because it's more expensive, you shouldn't do it. That's not really a good argument for me, right? I like cars. I use car analogies a lot. So you could buy a Toyota Yaris here in Canada for around $20,000. You can also get a Lexus LS here in Canada for around $150,000. That's 7 times more expensive. And now these are the exact same thing. 4 wheels, windshield, a door, it gets you from here to there. The cars are even made by the same company. So when you use the "it's more expensive, don't buy it" argument, that means that nobody should ever buy a Lexus and everybody should only ever buy a Yaris. And there's never any option to buy anything except for the Yaris. And that's silly, right? Like, sure, some things cost more, some things cost less. Just because they cost more doesn't mean that they're bad, and it doesn't mean that you shouldn't do it. They're also probably a little bit different. That's why there's a price difference. Another reason people say not to do infinite banking is because it's too complex. And the complexity of infinite banking, like this is a really big common complaint. And many find it that it's intimidating to understand the moving parts inside a whole life policy, which could include your premiums, your cash values, the dividends, the policy loans. And this is an actual quote that I read in an article. And here it goes. It says, "Infinite banking can be a complex financial strategy that requires careful planning and understanding of the policy terms. It may not be suitable for individuals who prefer a more straightforward approach to managing their finance." And so that's the end of the quote. While there is a learning curve, the core principles are very straightforward, especially with the resources that we've created for you all over this YouTube channel. We also work with our clients and we coach them for their life when they set up a policy with them. So we help them to understand the values. We help them to understand what they can do with the policies. We help them to understand the taxability, how to take loans, how to pay back the loans, how to set up your beneficiaries properly. We don't just set up these policies for people and say, "Here you go," and then never talk to them again. We actively work with our clients over time. And now if you find these policies complex, that's okay. It might simply mean that this strategy isn't the best fit for you at this time, but it doesn't mean that it's not a good strategy for other people. Another big complaint that people have is that you have to pay interest to use your own money. This is a big one. And some people really cannot wrap their head around why would I pay interest to use my own money? This thing is obviously a scam. So now the benefit of taking the loans against the cash value of your policy and paying the interest is that you never withdraw the money from the cash value. So you never interrupt the compounding growth over time. And so now this really adds up over the lifetime of your policy and is a key feature of how the strategy works. So say when you liquidate your investments for cash, you stop the growth. With infinite banking, the cash value growth never stops if you do it right. So I take policy loans from my policy all the time myself, and I understand that there's an interest charge on it, and it's part of how it works. Another reason that people think that infinite banking in Canada is a scam, and this is one of the main reasons, is due to overly aggressive sales tactics, especially in the US. Some financial agents pitch infinite banking as a miracle solution to everyone, claiming, it's the answer to all your financial needs. And I agree with this complaint completely. There are some total dickhead, pushy salespeople out there that really should never be talking about infinite banking, and they do the industry a disservice by even existing. And I wish that there were not aggressive salespeople who did the wrong thing and they line their pockets at the expense of their clients. But there are, right? There's also life insurance agents out there who try to fit this strategy onto everyone like it's a miracle cure. But again, that's also not a good idea. The infinite banking concept is not for everyone. It is a terrible idea for some people and it's a great idea for others. You have to have good financial habits in place before doing this. You have to have good cash flow. You probably should fill up other investment accounts and take care of other financial priorities before doing something like infinite banking. So with this argument, I totally agree. Pushy salespeople, I don't like them either. Our value system here at Safe Pacific ensures that we are never those people because I don't ever want to be those people. In fact, you can see our value system. It's written on our website. It's written on the wall in our office. And one of those values is no pressure, no rush. And so now how do you know, is infinite banking right for you, right? Like I said, it's an awesome tool for some people, but it's definitely not meant for everybody. And it's not intended to be a one-size-fits-all approach. If you're building your financial foundation, use tools like your TFSA, your tax-free savings account. Use your RRSP, your registered retirement savings plan. These are great starts. Infinite banking can come into play once you're ready for a more advanced strategy. And if you're ready to learn more, and if you'd like to discuss setting up an infinite banking strategy for yourself with somebody trustworthy who knows what they're doing, please reach out to us directly through the website, which is safepacific.com. There you can book a meeting and we can explore to see if this approach aligns with your financial goals. If it doesn't align with your financial goals, we're not going to try to sell you this thing. We're going to tell you that because, for us, there's no point in having clients that don't suit the policies that we're setting up. It's just not a good idea. We're not at the point in our careers where we're trying to sign up every single person. We only want to work with good clients. So if this is a good idea for you, we will tell you. If it's not a good idea for you, we will also tell you. So that's it for me today. Before I go, if you got some value from today, please do all those things that the robots and the algorithms love. So hit the like button, hit the subscribe button, leave a comment, share it with a friend. And if you want to get in touch with us, like I said, it's through our website, safepacific.com. Send a message. It comes to me. Somebody will reply to you within 24 hours on business days. And that's it for me today. Thanks for watching, and I will see you next time.